Hey everyone, welcome back to the channel. This week, we're going to take a step back from our usual valuation videos, and I'm going to really walk through in detail how I personally do due diligence on a company. And these videos may end up being a bit longer in nature, as I'm going to be spending a lot more time breaking down every step I go through. So this is going to end up being probably about a 5-part series, and we'll have videos covering basically these topics. The first one is going to touch on basic company information, just looking at some basic company stats, how to access most recent financial information, things like that. Second video, we're going to talk more about reading the company's 10K and how to find their most recent investor presentations and earning calls, all things that are very important to understand as an investor, and things that may not be as easy to find on the SEC website and tough to find if you don't know what you're looking for. So we'll walk through things to look out for and things that can be valuable in your valuation. Third video, we'll be looking at kind of the competitors in the space there and some common multiples to use to understand from a valuation perspective. And then fourth video, we'll talk about just making kind of future financial projections and some best practices that I always keep in mind. And then we'll finally wrap the whole series up with the DCF. Now, like I said, I believe these will probably be longer videos in nature, but I think there'll be a lot of good content in there if you're a newer investor. So let's go ahead and hop into our first video. And, the first thing I always do before pulling together a DCF or reading the 10K or 10Q is just kind of pulling out some basic information on the company, which I think is just kind of important to kind of baseline and set, how's the company looking from some high level financial information. So these are kind of the basic stats I really cover, and it's going to be the, stock ticker, the stock price, number of shares outstanding, the market cap, how much cash the company has, how much debt it has, the enterprise value, and the net cash. I think these are some statistics that you should be comfortable with, understand how to calculate and gather them. So let's go ahead and we'll start. We'll just jump right in. Let's, pull the stock ticker. So for this series, we're going to be looking at Walmart. So I use Yahoo Finance. There's a lot of different sites you could use. I think like Bloomberg, Wall Street Journal, all sorts of different companies will have this information, but personally, I like Yahoo Finance. So head on over to yahoo.com/finance. And in the top search bar, if you're not sure what the company sticker is, you can start to type the company name. And I think if we just type in Walmart, you'll see it'll kind of auto-populate and we'll see Walmart trading on the equities, WMT on the New York Stock Exchange. So we'll go ahead and open that up, or New York Stock Exchange, NASDAQ. Okay, there we go. And this will give you a little bit of summary data. You'll see kind of the previous close, the current stock price, the market cap of the company, and some other interesting things, right? EPS, the bid, the ask. But so I'll record the stock ticker, the stock price, and the market cap. And we can also calculate the market cap, and I'll show you how we do that or how Yahoo Finance does that here in a second. So, what we're going to do next is we're actually going to hop on over to sec.gov to pull some financials. Now, these financials are available from a plethora of sources. And I think even on here, they'll have some of it. If we go to like the financials tab, you'll see they have financials in here. It's not that I don't trust it. It's just I like going to the source documents myself because there's a lot of adjustments when you're pulling together these numbers that people will make. So I like to head over there myself. So to do this, what we're going to do, we're going to head on over to sec.gov. And if you've never been to this website, it is the US Securities and Exchange Commission website. All companies that are traded on a US stock exchange are required to submit filings here. So this will include foreign companies if they're traded as an ADR, but the filings will be a little bit different, but they are all located on here. So what we'll do, you'll go ahead and you'll click, and if you're in kind of full screen, you'll see this more search options. If you have it as a half screen, you'll see these 3 little bars. You're going to click there, and we'll go ahead and click on more search options. And then you'll see here the second option says ticker symbol. So we can go ahead and type in WMT for Walmart and hit enter. And what you're going to see is a giant list of different files here that have been listed. And there's a lot of them, and it can be definitely overwhelming if this is the first time you've ever looked at the website. The default search method here is most recent filings the company has made to the oldest filings. So you'll see, right, 6/4, 6/4, 5/25, so it goes down. And what we're going to look for here really is the most recent either 10K or 10Q. And I'll talk a little bit about the differences in the two. And I already have both of them pulled up. So here's the 10Q, and then you could actually keep scrolling down and we will find there's another 10Q, another 10Q, another 10Q. So we probably missed the 10K in there. 10K right here. Yep, back in March. And then their most recent 10Q here. And you'll see a lot of different filings. You can click through these and read them. A lot of different stuff, a lot of different things. Like a proxy statement will be the definitive 14A. That's going to be like voting materials at the annual shareholder meeting, things like that. If there's 8Ks or like special reports, like any material items that need to disclose. So a lot of different things, really easy to get overwhelmed. But we'll just go ahead and open up the most recent 10Q, which I have open right here. And then I also pulled up the most recent 10K as well. So the first thing we're going to gather from here is actually going to be the shares outstanding. And, something I want to mention here. So it will be the last number before the table of contents usually actually. So that's where you'll locate it. So here's the table of contents. If you scroll up just slightly, the registrant had 2.8 billion shares of common stock outstanding as of June 2nd. And if we're in their 10K, very similar thing. So we'll scroll down, you'll see table of contents, you go right back up, then that last number that will be the shares outstanding. So we'll see their 10K was 2.81 billion, and this is 2.80 billion. So that means looks like they bought back probably 15 million shares of stock. If I had to take a rough guess, that's probably what's happened. Now, something to note is this is not the fully diluted share count. Now, what that means is there are additional shares that the company could issue or has issued, sort of. So what that means is employees may have stock options, which is the right to purchase the share prices or to purchase shares. There could be restricted stock units that vest over time to employees. There could be there's other versions as well. There's like SARs, which are similar to an RSU and a stock option. So there's a lot of equity compensation that could be outstanding for employees that could convert to shares at some point in the future. 99% of the time, this isn't going to have a material impact to the total shares outstanding. If you are interested in learning how to calculate fully diluted shares outstanding, take a quick Google search and type in Treasury Method shares outstanding, and there will be some materials on that. So we'll pull that in, and you'll see shares outstanding I pulled this 2.802, and I have my numbers in billions. But if we wanted to calculate the market cap, another thing we could do, and I'll do it over off to the side here just so we can see. Market cap is really just the shares outstanding times the stock price. And you'll see we get the exact same market cap, 392.61, 392.61. So, I think that's important to note is a lot of times for new investors, I'll hear them say, oh, the stock price is $1,000. The company must be doing great, big company. That's not true at all. The stock price is only one variable in how big or large the company is, the other being the shares outstanding. So a good example of that is I think Apple, right, is the largest company in the world, and they do not have the largest share price at all. I think they trade at $140. So if you're like, oh, they trade at 140, Walmart trades at 140, they must be the same size. That's not true. Apple is 6 times larger than Walmart from a market cap perspective. So just something to keep in mind. That's why we pulled the shares outstanding, and it's just useful information to understand and to know. So now the next thing we want to pull out is going to be the debt. And there's going to be a couple places we can find this, but the first place I like to go is going to be the balance sheet. So if you go to the table of contents, there'll be some hyperlinks in newer documents. Click on that, take us to the balance sheet. And when we're looking at the balance sheet, you'll see a few different things. You're going to have to read through it to really find the debt pieces. So there's, in my mind, short-term borrowings. That sounds like debt. We have long-term debt due within 1 year. We have long-term debt. So to me, those are probably the 3 pieces of debt. And if we add those up, which I've done over here, you get $44.14 billion of debt. Now, there's another place you can find this as well. Below the financial statements will always be the notes to the consolidated financial statements. If we go here, if we actually scroll down on page 10 in this filing, they're going to have short-term borrowings and long-term debt. So we'll see the company has committed lines of credit. You could read through this, right? 364-day revolving credit facility at 10 billion and a 5-year facility at 5 billion. And it says it's currently all undrawn. So they're saying they don't have any short-term debt. Now their balance sheet, if we recall, if we scroll back up, their balance sheet actually said they had short-term borrowings of 362 million. So this leads me to believe they actually do have some very small short-term debt that they haven't paid off, that they're not capturing in this comment here. And then they'll have a summary table here of their total long-term debt. So we'll see, right, balance 44.3, repayments of long-term debt, and then others, so balance total 43.773 billion of long-term debt. Now this is all within the 10Q. And something I want to highlight here, which I think is an important thing to understand, is the difference between a 10K and a 10Q. If we look at this 10Q, this is all we have on the debt that they've provided in the notes. If we go over to their 10K, similar thing, we can go to there's going to be financial statements, and then there will be, where is going to be might be under, it's probably just going to end up actually being right underneath this. So we'll see the balance sheet first, right here, right? So short-term borrowing a little bit, long-term debt, and then long-term debt again. So it looks very similar, right? The balance sheet does. Now, if we go to the notes, this is where things are going to be different, and I believe it's on page 68. If we look at page 68, you're going to see short-term and long-term borrowings, 5-year credit facility, 364 revolving credit facility, available, drawn, undrawn. You'll see it year over year. And it's also going to talk about the respective interest rates, weighted average interest rate of 1.9 and 5% respectively. And then if we go to the long-term debt, this is much more information, right? So we're going to see unsecured debt. If they had secured debt, it would be listed as well, most likely. Fixed variable rate, the difference there, what the average rate is for that debt based off the year. So we can see right there, fixed debt hasn't really changed. For the US denominated, it's gone up a little bit, but that's probably because they've just either taken off a little bit more or paid off some. But their variable rate we can see has dropped 160 basis points, 1.6%. So that's just because rates have come down, so they're benefiting from having less variable rate debt because it'll be LIBOR plus a floating float, or it'll be some amount, like usually 0.3% plus LIBOR, which is a floating rate that changes. So I guess what I'm trying to say here is you'll see a lot more information in the 10Q or in the 10K than in the 10Q. So you'll see a lot more detail around the debt schedules, and it's a common theme throughout the entire document. If we look at the total length of this, right, 87 pages for the 10K, and the 10Q is 33 pages. So it's almost 3 times as large. So there's a lot more information in here. So just wanted to highlight that as we kind of move through it because I think it's an important thing to understand. And the last thing I'll note about this is a 10Q is not audited, but a 10K is. So a 10Q is a quarterly filing on just kind of a snapshot of how the company's done in the last quarter and where they're at, but it is not audited. It is self-reported. The 10K is audited by an external auditor, and it will be signed off on, and there will be a letter from the auditor saying they have reviewed and agree with the financials that they're reported accurately. So just another thing to note there. Now, the last thing we need to pull out of the 10Q is going to be their cash. And this is usually pretty straightforward, but if we go back to the balance sheet, you'll see cash and cash equivalents. And it's one of those things you have to read through as well, right? And you'll have to look through all their assets and see if anything else sounds like cash. Now for Walmart, this is very straightforward. Cash and cash equivalents is the only thing that sounds like cash. Now, if we go over to a company like Tesla, which I have their most recent filing pulled up, and let's go to their balance sheet. What we'll see is we'll see cash and cash equivalents, 17 billion. Okay. Look through accounts receivable, inventory, prepaid. Nothing else there sounds like cash. And then if we go to their long-term assets or their non-current assets, I guess, operating lease, solar energy, property, plant, and equipment, operating lease, digital assets. That sounds interesting. I wonder what that is. Intangible assets, goodwill, other non-current assets. So, something that I know that I've read about is Tesla has a really large Bitcoin position. I wonder if that's captured in the 17 billion. The answer is it's not. It is this digital assets. So they have 1.3 billion of digital assets. And if you read the entire 10Q, you would know that, and you could actually do a quick search here for Bitcoin, and you'll see they say during the 3 months ended, purchased an aggregate 1.5 billion in digital assets comprised solely of Bitcoin. So you wouldn't gather that just looking at the balance sheet, but you'd have to read the entire document and you'd kind of piece that together. Now the question is, as an investor, do you want to consider digital assets to be cash or not? Now, I think that's another discussion. I think I personally would because it is incredibly liquid, right? If they want to go sell it, they can. If they want to buy Teslas with it, they can, right? So there's a handful of merchants that accept it. So I think that this is a very liquid item. They may be treating it as a long-term investment, but in reality, I think it's more of a cash position for them and not a speculative investment. And if it is a speculative investment, maybe they shouldn't be in the market of doing that, in my opinion. So I would treat that as cash. Someone else may not. So just something to know. And then sometimes you'll see you'll see cash and cash equivalents, you'll see marketable securities. A marketable security is just like cash if it's a short term, if it's a position in another company, right? Another stock, or an ETF, or if it's a short term treasury bond, or treasury note, right? Something like that. There could be other forms of cash that aren't direct cash. Really what we're trying to understand is what's their short term liquid assets that aren't going to change materially in price. And now if you go back to Bitcoin, maybe it would change materially in price, but something that they can easily liquidate to pay off debts is what we're trying to capture there. So now the last thing is, after we've recorded the cash and debt and shares outstanding in here, is we're going to want to calculate the enterprise value. So, this is a common number used in valuations when we look at company multiples. It represents basically the total cost to purchase 100% of the company. And we're going to be using kind of the shorthand enterprise value calculation, which is market cap plus debt less cash. So what this is saying is you'd have to buy all the equity in the company, which is the market cap. You're going to have to pay off all their debt, and then whatever cash they have, in theory, you would take that cash to pay off the debt. So it's kind of less you have to pay for the company because you would receive that cash when purchasing it. So it's really the entire value of the company that's outstanding that would cost to take over that firm in its entirety. Now, this is a rough approximation of enterprise value. The actual full formula from an academic setting is you're going to add preferred shares and minority interest as well, as you would have to buy the remainder of the minority interest, and then you would also have to buy out the preferred shares. But for 99% of companies, it's going to be pretty immaterial. I think if you go to Investopedia and type in enterprise value, you'll actually get the shorthand formula that we're using here. So you can see we get an enterprise value of 414 billion in comparison to a market cap of 392 billion. So it's always just something to keep in mind. If you look at a company like Apple, you'll actually see an opposite thing where the enterprise value is probably lower than the market cap because they have so much cash and they have no debt. So if they have a $2.2 trillion market cap and they have 200 billion of cash and zero debt, then their enterprise value is actually 2 trillion instead of 2.2 like the market cap. So just something to keep in mind. Now, this is really going to finish up our first video. The last thing we have here is net cash, which is just going to be your cash less your debt to understand, do they have excess cash on hand or not that's being deployed, that could be deployed. So in this case, they don't. They couldn't cover all their debt, so they have a negative net cash position. But anyways, this will finish up our first video of the series. The next video, we're going to actually dig a bit deeper into the 10Ks and the 10Qs, and we'll kind of walk through those and look at some of the things you want to look for and highlight as you read through it and kind of keep in mind as you build out evaluation. Thanks so much for tuning in. Please leave any questions or comments below, and I'll put a link to this little key stats as well in the description if you want to download that. Thanks for tuning in.